Should be the top story in our business bulletin, but it's not. Instead, it's the market. So let's go to them, shall we? Asian stock markets mostly higher, in fact. The main influence there, investors weighing the potential outcome of a preliminary agreement between Russia and Saudi Arabia to hold off on further increases in crude oil production, possibly alleviating the growing glut in supply. So 1 up, 3 down, but roughly hanging around the norm there. Now, France's largest power supplier, EDF, is going through rather a rough patch. It's published disappointing annual results and has requested the help of the French state in order to guarantee its future investment projects. The majority shareholder has obliged and will accept dividends in stocks as opposed to cash. Charles Pellegrin explains.
France's leading electricity supplier in crisis. In 2015, EDF's net income fell by 2/3. This comes at a time when the company is getting ready to face several costly challenges. First of which will be the 50 billion euros spent on the maintenance of EDF's 58 aging nuclear reactors in France. EDF will also be buying Arevas's nuclear reactor construction business for just over €1 billion, and it has to set apart 800 million euros for a nuclear waste storage site. And finally, the construction of 2 reactors in the UK for 23 billion euros. The Hinkley Point project has raised criticism for its cost, but EDF's CEO is determined to continue with it once negotiations with its Chinese partner are done.
The project in the UK will start in 2019, but the investment decision needs to be made now, and we are working closely with the board. It will be done soon. Even Economy Minister Emmanuel Macron has said so. It's a good project, and we will say yes.
Levy is predicting difficult times are ahead, however, as his company's stock value fell more than 50% over the last year.
We are going through stronger turbulence than we expected, unforeseen issues on new markets, particularly on the electricity wholesale market.
EDF is confronted with an extremely low price of electricity, 26 euros per megawatt hour as opposed to 41 euros a year ago. In other words, barely enough to cover its operating costs. The good news, however, is that EDF's majority shareholder, the French state, will be receiving its 2015 dividends in stocks instead of cash. This will add 2 billion euros to the company coffers.